1 to 2 streams per week. So hello everyone, my name is Eric, narrative pilot at NodeOps, and joined by Sheena here, and soon we'll also be joined by Ashwari, who is actually, funny enough, I just found out before this stream that both of them are actually angel investors at NodeOps, right? So everybody knows Sheena. If you want to say hi, and then we'll sort of provide additional context about the agenda today.
Absolutely. So, of course, I so wanted to change my, the designation today from 404 Soul to probably writing the angel to NodeOps. So, I think I've spoken many times about NodeOps and my emotional connect and also the heartfelt note that I posted a few days back. But I think I've never upfront come out and mentioned that I was actually the first angel investor to NodeOps. So, while I was the first one to hear the idea that Naman had, while walking down, I was also the first investor. And here comes Ashwari. How are
Hello.
you?
Oh man,
Good. How are you guys?
all
Very
good.
well. Honestly, I'm so overwhelmed right now. Ashwari, you'll remember I think about 2.5 years back, we had one session at the Daper House in Bangalore
Yes.
where I invited you and Naman to come in as panelist to do a very fun-loving session. And that was the first time when Naman actually publicly spoke about NodeOps.
Yeah, I remember.
Yes. So Eric, for you, like it was an event that I kind of hosted in Bangalore for a small meetup, and I invited Ashwari because, of course, he is the face for Polygon in India and very humble and someone who's always ready to educate people around. So it's super nice to always have him. And I invited Naman, then my friend from his previous company, and I did a panel with both of them. And that's when they started discussing about the whole thing about nodes.
It's
And
amazing.
was also among our first set of angel investors. Over to you, Ashwari. How does it feel?
Good. I think super happy that the way like Node Ops turned out. I think every day I keep hearing all the things that you guys are doing, and how the way like you're taking things forward, like on like regular basis, new and new innovations coming in. So that's really I feel super happy about it, to be honest.
Thank you very much. First things first, pleasure to meet you, man. I think it's the first time we're actually connecting, and I think it's super important to also understand that companies are just ideas, right? They're more often than not don't come from like a single person, but comes through sort of productive exchanges that happen between, Ashwari, such as yourself. You're already like an active contributor and builder in the space. I do X, Y, and Z. Then you meet Naman, who is already doing something else at a previous protocol. You come together from a conversation, spawns an idea that then 2, 3 years down the line leads to us having this conversation. I think it's
Yeah, I
it's
can I can tell you this was even before that. So basically, like I and Naman, we were on like a new we were like off last to last year in December, and like we were on a trip together to like the northeast India, and that time like he kept on shilling me this Zai note you should buy a Zai note, and I'm like, bro, what is it? And he's like, no, you should invest. And I think just before 2 hours or 3 hours before actually that whole thing went live, he made me purchase a couple of those notes. And that's where I was like, okay, this looks like a good idea. And he's like, yes, I'm like kind of going out and thinking of doing it full time. So it was like an idea that came out when we were relaxing in northeast of India, enjoying like our holidays. And yeah, that was like the first kind of time I heard what he was planning to actually go out and build in node ops.
Also, one more, now that we're going down the memory line, in fact, Ashwari was the one who introduced me to Naman.
Yeah.
All of you guys know that I used to work for an exchange. And as a BD at an exchange, you have targets to get projects to get listed, right? Quality projects to come. And I just DM'd him, like, listen. And we both actually have a common career background as well. Both of us share the same kind of finance degrees. So that's again how we vibed when we had, met in the very olden days. So he told me you should talk to Naman. That's a great project he's building. And definitely, if you're making sense to him, he'll definitely choose your exchange for listing. And that's how all three of us got together. I think everything is very much planned. And yeah, of course, Aishwarya, I know about the Northeast trip because after you guys came back, you just made my life. quite eventful with getting all the investor agreements and all the legal aspects in place. So I got quite occupied after your Northeast India trip.
That's good.
It's a good problem to have, I would say.
Exactly.
So, I mean, before we get into, because we're here, of course, to discuss the utility-driven economies and tokens, right? But I think we want to make the most of having you here, Shwari, and of course, giving you a pedigree within the space and just mainly experience, right? Because more often than not, you measure years in crypto like dog years, considering how intense the pace is and there's just level of relentlessness. How have you noticed from, although it'll be wrong to say from the outside looking in because you're not outside at all, because I'm sure you have a direct line to Sheena, Naman, and the other members of the team to understand what's happening. But as an observer, right, considering that you're not actively operationally involved on a daily basis, how have you seen the evolution, right? Is it something you expected from the team to go from, a NAS to then deepen that work to a cloud solution and then the next phase, which will,
I mean,
reveal.
honestly, like, if you ask me, like initially, did I know about it? The answer is no, absolutely no. Like I thought like it would be like just like node operations and like that would be it. But like I think the other thing that Naman had already kind of told me was the entire console or the business that he wanted to go out and do. What I was like more bullish on, like in like the two things, like when like the way I invest in, and the biggest one, like 80% of the 80% reason is that is not like as a business what you want to do, but like betting on the person like who is doing it. So like like 80% of this reason why I probably went in was not to like go out and like maybe make a return out of it or like do something on those lines, but it was majorly like I know like if Naman is doing something, he probably will figure it out and like will find out whatever he wants to. And like he's kind of like someone who is not gonna go out and give up like if something does not work out, and he's gonna go out and iterate and kind of go out and find like more product market fits and like not rest till like he actually is going to go out and do that. So that has been like something which I continuously see that, like I still see it even today, like he has been working day in day out, like trying to go out and think how to make the project much better, how to go out and actually generate revenue, how to go out and say, like I remember I told him like at one point of time, like you remember that Silicon Valley like famous quote, like you should always be pre-revenue when you actually go out and be in the market. And he like I actually was talking to him about that same thing, and he was like, no, I do not want to go into the market pre-revenue. I actually want to have like a proper revenue. I think he used to kind of every week send me the dashboard where he would show that we're in the top 5 now, making revenue in the vertical. Now we are top 4, top 3. And like he was like continuously kind of focusing towards how that number goes up from a revenue perspective, because like he like a lot of people, not lot, like I would say 90% of the people or 95% of the people in the industry are like they're in for a quick gain. And like I've never seen that from like Naman's point of view. Like he's never in like, okay, I want to go out and make these quick gains and then like use those quick gains to get out of the industry and like do something of our own, or like don't do anything at all, which like most of the people in the industry are doing. So he's been like always consistent towards like being building an actual kind of business, and that also comes from like the background that he has been brought up in. Like his family has a business, he knows like how to kind of go out and build those businesses because he has seen that since his childhood. And like that is one of the biggest kind of point of view that I have had from him. And like every time he kind of keeps telling me that this is what we are doing, this is how we are kind of going out and changing. And every time I've been like always been like, yeah, this guy is like kind of going out and trying to figure out. So he's already ahead of like a lot of people in the in the industry, because like when you look at it from a perspective of like industry, like a lot of people are not ready to kind of go out and make mistakes. They're like, okay, if it's working, let's go out and let it work. Don't change it, we will see what happens. But like he has been continuously iterating, seeing like where's the product market fit coming in and like how they can actually go out and do it. So that is like a really good thing, like which I look as like someone who is not inside the company on a day-to-day basis, but like still looking from the outside. And like of course like whenever like he's like, okay, I need connections here or I need some help there, that is where like I kind of go out and help him.
That help I can never, I mean, I can validate. I have reached out to him for so many connections, and he's ensured that despite his busy schedule, Ashwari is there to help us make that connection.
Exactly. Yeah.
Yeah, I think the underlying there is that when the mutual interest is genuine and comes from a good place, then and you add value, of course, right? Because I'm sure I know Naman quite well. If he does reach out, it always comes from a position of respect, right? And insight that he wants to learn. So yeah, I think I've learned myself that there's truly never a right moment to do something. Like you just got to learn by doing, moving, and building, right? And then discover. So yeah, today, where I think the word utility gets thrown around a lot, especially when it comes to tokens, it is a rather subjective term, right? Because what might, your definition of utility might be different from another team's, another protocol definition of utility. So maybe let's do like a quick round of Sheena, for you, like what does it actually mean, considering, that we launched, I think it was 30th of June, so 4 or 5 months ago, the token, an important year. So how did we approach the utility aspect from a token perspective?
So, well, if I were just to answer this in a one single line, that what real utility is, for me, it is something that you're able to map a very tangible outcome, which is visible, which can be substantiated by the correct metrics that is there in that particular product that you're offering. So, if you're able to build, you're able to ship, you're able to bring something on the table that is sustainable despite. See, micro conditions will always be there. We all are from the similar backgrounds, and in finance, whenever we are doing any kind of simulations, we don't negate the effect of micro and macro. But the fact that you're surviving the turbulence, you're still continuing the project or the product you're working on, that is what I feel is real utility for me. If you're mapping it directly to a token, then simple answer would be real utility means that you still survive and do not just cry or shout that let the markets turn green and then I can prove something. So I think if the token purpose collapses the moment there is a big red turn in the market conditions, that means I feel it never had utility. It was just running on certain noises. That's what I believe. So real utility will always be working up. It'll always show up in consistent. It'll always show if there's a consistent demand, right? So if you have a real underlying service that you're offering, the services are being consumed, actions are happening around it, because the system needs that. Then of course you are providing the real utility. Otherwise, I think you are just incentivizing. That's my take on it.
And Ashwari, sorry, because I wanted to ask you, thank you very much, Sheena, because I couldn't agree more, right? Um, as always, when I get, okay, good thoughts, because essentially I think within crypto, we projects create more often than not additional economies, right? And you want a token to denominate and regulate the economy. But from people who are not in the space, right, they look at this plethora of, more often than not, non-communicational and non-communicative communicative economies, and they don't understand why A, there are so many economies, and B, why each one should have their own token, right? So to you, right, something that stood out about Polygon is A, like the great work you've been doing in terms of adoption for payments, which is gives you a level of tangibility with the real world, right? So do you think utility going forward will have attached to it this element of, okay, your token of course underpins your economy, so in this instance could be the Nodos network, but how will it actually be useful for me on a day-to-day basis, right? What do you think?
Yeah, I mean, like from a utility perspective, like I think, like Sheena said, there could be different ways in which like how you calculate or evaluate utilities. One could be like from the perspective like you need to kind of go out and add value to your token by kind of creating mechanisms like burn, by like buyback. But there could also be ways in which like, so the way I look at it, utility, and like I wrote about it as well, is like when you look at Polygon and when you look at payments, like I think what we have been trying to go out and do historically, like again, Polygon has also made quite a lot of mistakes, try to do everything. And like we have, if, I mean, like I'm very open to kind of going out and accepting that as well. Like from a Polygon's perspective, we have done that. And like there was a point when people were like, guys, we don't know what Polygon does because you guys are like everything and nothing. So there is, so that was like kind of like a thought process, or like the way like it went into the market. And but like over the last year, like since kind of like a lot of things changed, because we were like, okay, we need to course correct, we cannot be like doing everything, we need to be like super focused towards it, because that is how you can create value. Otherwise you will just have like multiple areas, and you will kind of like just give some small values to each area, thereby like not doing anything in any area. So saying that, like I think now what we're trying to go out and focus, and where the utility comes in is like when you look at money today, like effectively the biggest thing about money has been that money is always transitionary. Like when you look at money movement is transitionary. And like when, since the money movement is transitionary, effectively what you're kind of going out and realizing is that there will be hundreds of thousands of stable coins, there will be a lot of money movement that would happen. But like what would create like a very big utility is like how powerful that money is on a particular, in a particular economy. So what that means is, if you look at any example in the world of a fintech, you look at Revolut. Like if you look at Revolut, the way kind of they have set up is like when your money is in Revolut, that euro, like we don't call it as Revolut's euro stable coin, but like technically it's like euro in Revolut app. And that euro has a lot of utility within that app. You can buy things, you can pay, make the payments, you can have your own cards, you can have like any utility that is required, so you don't have to go out in any other businesses. Similarly, like if you look at Venmo, if you look at like any of those apps, and that is now what we are trying to focus on, like how we can create a dollar on the chain itself. You can call your dollar whatever name you want, you can call it your PayPal dollar, Circle's dollar, or whoever's dollar, but that dollar should have a value on chain, so that within that economy you do not want to, or you do not need to exit, because you're getting everything. So imagine like once you have on ramped all your money on Polygon, you can actually go out and have a card which can help you spend. You can go out and have like, let's say stocks where you can invest. You can have money market fund or real world assets where you can invest. You can go out and bet on Poly market. You can actually go out and lend and deposit to generate yields. So that is like, which is what is going to be like super important. So effectively what happens is, when you look at all these new chains, they come into the market and they're like, oh, we will be this, we will be that. The biggest challenge is, yeah, what people have to kind of go out and look at is that utility will only come if the money is in the bank, if the money is on the chain. If and that is like, if you like connect it with today's world, why are the all the banks across the world like becoming, or like they are kind of challenging all these stable coins, is because their money is leaving and their money is going elsewhere. And that's why they're like, this is not the right thing, because we are losing low cost capital and is disrupting all our business models. So that is what it, like makes it important, and that is where like we are trying to go out and focus the value of the token itself, apart from like buybacks, burns, and all those use cases. How actually this entire economy is powered by one single thing. So if you have this one single token, you can do anything and everything on the chain without actually kind of going out and paying any other fee, paying any other things at all. So, and that is where like the real economic unlock would happen. That's why like if you look at all these partnerships that we are still kind of working on, like, and we are announcing, they're just adding more and more value to the dollar on the chain if it is on Polygon.
There's a lot to unpack there. I mean, I would ask you a lot of questions on that front, but I think it would sidetrack a little bit from the topic I had. But congrats at the end of the day. I think even hearing from a profile such as yours, and from a project such as Polygons, to understand that it's not all roses and lilies along the road, right? Like you do get to certain points where you might have been overdoing it, and you sort of have to go back to the drawing board and understand, okay, so what we're actually trying to deliver for our users, how, and just focus on that cause. So on this line of what can I say, almost advisory, right, given your position as both as angels for node ops, what would you say are some of the most common mistakes that teams at protocols make early on when designing token economies? Sheena, and then maybe Ashwari, if you want to go.
Yeah, go ahead, Sheena.
Okay, I mean, I'm quite less experienced compared to what Ashwari holds here, or maybe the other people in the space. But one thing that I can surely, speak right now is that when you're designing your tokenomics, it's not just a mere paper or a marketing tool. I don't know why, but like a lot of people sometimes, I mean, of course, I've overheard, so not really gone into the boardroom into discussion, but they're very keen to know that what tokenomics kind of really played well. What, like, they try to create like a recipe book. So even if you look at a grandma's recipe, which might be the best one for you, but probably if you're trying to implement it in today's time or in a different group or with different factors involved, it will never give you the same aroma. So likewise, what I feel is that tokenomics is not your marketing tool. First of all, that is something I really want to make it loud and clear. It is something that if you're putting it on paper, when you're putting into execution, people are really able to see that value that you're driving out of it. That's why it's called tokenomics, right? Else it could have been just called anything else. So, by yelling out through some, sorry, but yeah, everybody understands, right? When I say yelling out through some blah, 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 that does not mean real tokenomics. And if as an early builder, you're going out, of course, you're a builder, you're like a thinker, you're a visionary. So when we say, that's why we call leaders or builders or innovators as visionaries, because you're able to understand or take a leap into what is required next. What is that one value capturing that you want to do in the market? And basis that, there is no harm in taking validations. There is no harm in taking notes. There is no harm going back into history. That is why history is there. But at the same time, trying to replicate it and trying to find shortcuts, I think that's a big no. And yeah, I mean, if you're just building up tokenomics, ensure that your simulations, your all, you try to do a lot of working around that. Try to understand that what is that real value that you're creating, what is that usage you're trying to bring. And if you're able to do that, I think you're definitely in that 2% of people who turn out to be the leaders.
Yeah, I think like just to add on to what Sheena has already said, from the perspective of like what early founders and like the way they're kind of going out and doing businesses, one of the biggest things is like they don't, like a lot of founders are like very thinking from a very short term perspective, that okay, what can we do to pump the token right away? And like then you end up kind of, yeah, you sure can go out and pump a token like very easily, but then like you have to also look at the other side. And like a lot of people like you meet, they always say, you have, why are you creating like a Burj Khalifa, which is like you go up like really high and then like you go down like along with it. So I mean, like those kind of things are kind of, a lot of people kind of are like, okay, let's do the short term. Like a lot of teams bring in a lot of hype, they would launch at a very high FDV, and then slowly and steadily what would happen is like people will start selling it. There's no utility of that particular token, it is like very short-sighted, like retail would lose money, and like they'll just go away. And this has happened like this cycle a lot. Like if you look at the entire meme cycle that has been there, that whole entire meme cycle literally just killed all the retail that again like tried to enter after losing the money back in like 2018, 19 or 20s. They were like, okay, let's, this time it would be better, they would make money. But if you look at the data and the stats, if you look at Pump Fund, like how many people actually made money more than $10,000? Not even 10,000 people. So like if there were so many people, where did the money go? Like it just got concentrated to very less number of people, because they had the tools to actually go out and make money. And ultimately most of those things actually vanished. And if you look at the token launches, like I think 2021, the number of tokens were around 20,000, right? Now like there are 20,000, 200,000 tokens launching every day. So that's why like the liquidity is going away, because like people are like slowly and steadily losing that money. And like if you look at a recent survey, I think which happened where it was like only 5% of the money is retail like now, and 95% is like all institutional. So I mean, that is kind of the theme. That is where like a lot of people are like getting into. And then when you kind of go out and try to explain like people like why they should hold your token, you don't have a reason, because ultimately why you should hold a token, because like no, nobody has like a clear why. So that is like a big challenge when you look at it. And this is what like a lot of founders do in like in the short run, to like kind of just go out, because there's a very big bubble on Twitter. Like, and that is where I feel like if they can appease Twitter, then that is like the best place, like, and everyone like is going to go out and say good words about you. Well, guess what, like it would never happen. Like even like if you look at Polygon, there were people who were like riding the wave. Like I bought like my first Matic token back in 2019, and it was like 2 cents, right? and like not even 2 cents, 1 cent or something like that. And then I wrote it to the top, and like I was like, oh, I should keep holding it. Like any asset which has gone so up and like you're still holding it. And this is like a lot of people, like not just Matic. I mean, tons of these people like who are retail, they kind of just go out and feel okay, this is just gonna go keep going up, and then they don't cash out, they get emotional with the trades, and then they come back to your founders. So ultimately there's no way to kind of go out and like say that okay, everyone is happy. Your job is to not make everyone happy. Your job is to make like the real business, which essentially if someone believes in, can in the long term generate like a real value out of it. Otherwise, like ultimately what happens is like you do like nobody, none of these people who are there for the short term, they kind of go out and make value, and the project also dies because they have spent too much in kind of focusing towards the chart, and that chart has yielded no results later on as well.
Yeah, I think as always, there's a lot there, right? And at the end of the day, you cannot make everyone happy, especially nowadays in this day and age where everyone has everyone has a, I won't say everyone has the opportunity to have a voice, right? So via a laptop and a keyboard, everyone can make their voices heard. But yeah, I was hearing I was listening to a podcast. I think it was with Elon. He was even saying like 70% of the I wouldn't say of the traffic on X, but like it's hard to gauge whether it's actually real people or not, right? Um, so at the end of the day, you're not even sure whether you're actually dealing with real users or not, of the ones that are trying to complain and having a stab at, oh, you should have done this, you should have done that. It's like as you mentioned, you can't make everyone happy, right? So you should just go along the road that you set out to do, learn, of course, from your users, the ones that are actually interacting with your product, and then refine it accordingly, right? So something else
Exactly.
that you mentioned, something else that you mentioned is that you can um, game the system a little bit by go through, almost artificial pumps, right? As you mentioned. And do you think we're going away from emissions heavy token models towards more adaptive, dynamic ones that essentially, of course, unbiased because given the position I am, that take more of a conservative approach, right? Where there is first a recognition of a validation, I would say is probably a better term for your products and services, aka revenue coming in, and then the token, grows in unison with the network, so that there is always sort of like a balance, right? And it's not just a life of peaks and troughs, which is what we just described. What do you think?
Yeah, absolutely. Like if you, even if you look at it, like the biggest like the third biggest token or the fourth biggest, like second biggest chain, like if you look at Solana, right? Like they had a massive emission which was like still like there available. And like if you look at their forum, they have been like, there have been so many proposals who are like, can we go out and reduce the emissions, can we do the emission to 1/5 or like 1/2 or whatever. Like, so I mean that, see, there are two things about it. Too much emission is something which would not work anymore, because people understand. And it's not, look, so there are two things. One, like from a perspective of emissions, emissions always happen. Like if you compare it to the Web2 world, like a lot of public companies, like if you look at the digital asset treasury systems, that's, there is a massive amount of new issuance that happens. So the problem with a lot of people on Twitter is they've never kind of in like learned any of those things, and they have never interacted with all those things, because they are like, they're more investors from a perspective of traders who are just wanting to kind of go out and make money from the charts, and like that's their business. So you, it's not like disrespecting them, but it's like the kind of users that you're kind of attracting. And like if you have more volatility, the people are not coming in because they're seeing real value, they're kind of seeing speculation, and they will kind of come in and do it. But so it's the same thing with equity market as well. Like a lot of those issuances, like there is so many issuances. Like if you look at all these DATs, what are they doing? They are literally going out and issuing all types of things within the company to raise more money, to go out and do whatever. Like they invest or they don't do it. But the point being, that is like nothing like which is out of the blue. It has always happened. It's just that there's a massive amount of knowledge gap between the people who essentially are trading into crypto versus the people who've traded into the Wall Street. And that's why like I think emission is seen as a very negative aspect into crypto, because like I see like As Polygon, we have 2% emission, 2% inflation, and people are like, your token is not pumping because there's 2% inflation. And I'm like, no. That essentially, when you have to understand this is, you have to understand that inflation is not bad as long as there is demand for something. But if there is no demand and you're continuously going out and inflating the token, the value will dilute. So that is like one of the biggest challenges that a lot of people do not understand. So overall, the way I look at it is like, yes, inflation to a certain extent is good. If you don't have a small inflation, like even Bitcoin has inflation. It's not that it's set to a particular number, but that does not mean it does not inflate. It is inflating, but in a way, like it has a proper mechanism where effectively over a period of time the inflation reduces. But even Bitcoin has inflation, so you cannot go away from inflation. For every economy that is growing, it is important. But if your economy is not growing and you're just kind of going out and dumping, then you become Venezuela, which is like you mint so much money that nobody cares about paper anymore, and they do everything with the currency notes because they're useless, right? So that is where like I draw that parallels of like whether inflation is important or not. It is to a certain extent. If there is demand, like if you look at Solana, they have been like they've almost 2x their supply in the last 3 years in the market, but there is still demand for it. People are still buying it. It's fine. Now, like if they're seeing that that demand is reducing and they're going for like, let's reduce the inflation, it is because they're seeing the demand is reducing. So that is where like you as a project, I don't think like you have to be like very like. And then there is another approach, which is like the Binance approach, where you have a token and you're kind of going out and reducing its supply over time. Why? Because then you're saying each of that asset that you hold becomes more and more precious, because the demand is still intact but the supply is going down. So there are two different models, both of them work, but both of them work like if there is actual utility of that token. If there is not, then both of them will not work.
Simple. It always boils down to that, right? Actual interest and demand for the products and services that the protocol or ecosystem in question is actually bringing to the world, right? Sheena, now today, like before is going live for voting, right? Bringing it back to Notups, right? How does before actually tie value directly to network growth and maturity, right? Which is something that Shweta just mentioned in terms of that if there is demand, then your token value goes up, right? So how does Pitfall make that happen, and what role does the community actually play in this dynamic?
So, well, I think on PIP4 also we had a very deep diving session last week as well, where of course we had Naman, Mukund, and myself, breaking down what exactly was PIP4, and of course cannot deny to what Ashwari just mentioned. So you could have a system where you are increasing a supply or reducing a supply, but at the end of the day, this all has to be very mathematical. It has to be slightly scientific. It just cannot be, you want to try out something and just do it, and just do it without even understanding what's the reason for that. So, well, now pushing it back now from an angel trying to just give a very generic overview, let me put on my hat as a Node Ops 404 soul. So, for us, what are we essentially doing over here is PIP O 04 is basically turning every buck, every dollar of the protocol usage back into a economic event. That's what essentially we are doing in a single line. So whatever fees have been generated is being generated via real products. That is automatically triggering a burn along with that. So there is no human involvement whatsoever. There is no manual way of calculating. There would be proper dashboards which are running in real time. So there is no discretionary. Can I use the word drama? So there is no discretionary drama or an emotional connect to do any kind of burn or mint over here. It's all formula driven. And like I mentioned earlier, also, we do have our revenue, which has been always displayed upfront through various dashboards. So it's not that it's only on Dune, but you can also see it on different other platforms. It's all synced. So the model definitely tries to become like a self-balancing in itself as the network is going to expand. So why will the value be accruing over here, or why will the value be expanding over here? Is it's all going to be linked to your network growth. So not because somebody wanted it, not because some tweet came which was making it trending, but it's actually going to be back, connected to every penny or every buck that is coming to the network or the protocol. So that is what PIP4 essentially is for. So idea for us when we also were designing our tokenomics was that we have to keep away the whole speculation game. We don't want that, we are just relying on our gut feeling, or we're just relying on some simple conditions going out in the market, but it's going to be relying on some maths, on real activity. So sustainability over here will not mean that you're just doing some random calculations, but everybody who is a part of our protocol would know that why did that burn happen, and why is that's why it's called the dynamic burn and mint. So why did that burn happen, why is the minting happen, and it's all going to be linked to the protocol. So this shifts basically the narrative from being like a team driven valuation to a usage driven. So that's all about PIF4. So it's very hard to manipulate, it's very clean at the same time. So that's why I also say that we don't come with an expiry basis of market conditions. We are doing all this with a pure validation which is coming through our numbers.
Yeah, and I think something to add there is that it might come across as, I would say, boring, but in the best sense of the word, right? In the sense that like it's not like it. I think to see it come to fruition, you need to be in it for the long term, if that makes sense, right? So, in order, I would say, because we are part of a culture where people are used to seeing, maybe a lot less now, but I would say up to like a year and a half ago, those common and frequent 10x's, 5x's, which were driven by meme coins, but we're still part of the same sector, right? So if you are a new token as part of this ether, then people are looking at your new play and say, huh, like why, are you looking to, like, is this a token which has the potential to, like, we're not looking at it like that at all, right? It's more done with a long-term mindset, which also gives us the tranquility to work properly, if you actually think about it, and make decisions that are not rushed, and that are for the long-term sustainability of the network. So people who are part of the network, part of the community, and part of the family, they will win, in my opinion, like inevitably, right? Because that's what the team has set out to do. And if we make mistakes along the way, of course, we'll be what can I say, communicating transparently, because that's what we've been doing from the onset. But now, as Trina mentioned, you don't almost have to rely on us telling you anything, right? Because the burns are the burn events are automated, they're weekly, and they're gonna go live either if the network is done extraordinarily well, or if you have a slightly more sluggish period. So yeah, that's it. Like, it's almost as if we provide the information, and it's up to you, it's your discretion. So you remove humans, and there's no margin of potential errors actually happening. And all of this to say, for you, Ashwari, do you think there is what can I say, some key takeaways that other protocols could take away from this approach? Or do you, like, just be honest, right? Do you think that this approach works only in certain market conditions, or it works because we're an infra play? Like, it would be great to hear your take on the matter.
I mean, to be honest, like right now, if you look at the market, and like even from a business perspective, like the earlier hue and cry in the market was institutions are not coming. Like institutions would come, like everything would go like parabolic, and like now when institutions are here, almost apart from two or three assets, nothing has gone parabolic. So, I mean, when the institutions come, they need to kind of go out and have some look at your utility and what exactly is your business model before like everything goes parabolic about your assets. So that is something which is like I completely agree to. Like you need to have like those fundamentals. You need to have like ways in which there is a very clear way in which like you can see the value accrual happening, and like people can actually go out and trust the code, which is where like the blockchain actually emerged. So effectively, like this is where like the world is actually heading towards. Like they need to see utility to make an investment. They need to see like why it makes sense to kind of go out and have something on it. So that is where the world is heading, and I think so that's why like I think you guys are like at the right track from that perspective. And like yeah, that is where the world would actually go for sure.
Awesome. exciting times to say the least. And yeah, yeah, I don't know how the institution. I think some institutions are already in the game, but their long-term impact will. Yeah, you just got to be in it to witness it, right? So, exciting times ahead for sure. Um, Specifically to about the infra protocols, right? Do you think they're becoming the most undervalued slash high potential layer for Web3 or no? Now, especially with the, as you mentioned, the infrastructure, sorry, the institutional adoption coming in and a different kind of demand and expectation from such an audience, right? It's almost as if you're becoming more mature as a space.
Yeah, I think that is where we are heading towards, like more maturity, and like the maturity will only come like when there are real businesses that are getting built, and it's not just like driven by hype altogether.
And I think we've come a long way. I think that whole noisy thing is slowly fading away. I think people are realizing that besides just making hype, you really need to showcase what you're presenting. So, and of course, infra has always been like an invisible layer. Of course, it will always stay. And, with the maturity coming in this space, things are definitely going to go. And I'm proud that it's going to go in the right direction now.
As I mentioned, exciting times. Um, Given your perspective, right, Ashwari, like because I think people who work for protocols, especially for such a big ecosystem, sorry, for ecosystem protocols such as Polygon, you almost have like you're a director of a shopping mall with so many shops inside, right? That are the protocols, of course, and they have all different interests and different profiles. You have gaming, you have socials, you have all kinds of mission statements out there and problem statements that they're trying to tackle through their innovative solutions. Um, I'm sure you have, I don't know, like given, of course, your payment role and remit within Polygon, but what are some of the most common words of advice that you find yourself giving to teams? Not only when it comes to token models, but maybe utility, like how to think about certain stuff. Like it would be great to probably hear your perspective on the matter.
Mean, like, I've always been saying that, and like I say it now even like harder, because now I like, this is where the entire meta is, and like I think Hyperliquid was the one that actually changed that meta, which was like, okay, you need to kind of go out and figure out a way in which you make money first, and then you can use that money for whatever purposes you need, but like you need to make money. Like, your token would not be an unlimited source of capital for you. It could be like good to start your ecosystem, but it would not be like a forever money that you always have. And like you need to bring like real revenues. You need to figure out what are the best ways in which like the utility is defined. You don't have to always like kind of follow like a particular trend, because like I think like a lot of use cases, like in payments at least, like I don't see like a lot like the use of from a perspective, like if there is a protocol who's wanting to go out and launch in a payments vertical, there is any use case for tokens. So but that it's not that like it's blanket. There could be some use cases where, let's say, a token is very useful, but like majority of the cases the token is not useful, so you should not kind of just enter into going and having a token. Because like one of the biggest reasons why this token economics, or like launching a token in the past historically has worked out, is because it immediately allows global access of capital. And at the same time, earlier in 2021, 2022, Wall Street was not available for you to do anything, because of whatever the political regime at that point of time was. But now that is changing. Like a lot of that use cases, like a lot of people like recently launched ads. A lot of people actually did IPO, which were the crypto companies, and they like right now are commanding a lot of higher P ratios as compared to the other people in the ecosystem. So that is where like I think the ways in which like you've raised money, they are changing. So token does not remain as the only source of revenue, or like only source of you kind of going out and raising funds, not revenue, but like raising funds. But overall, like that is where like you need to design your own systems, and you have to like see what works and what doesn't. If it is not working, you have to kind of go out and change it as quickly as possible. But overall, like that is where like I think every project will have its own ways to grow and find utility.
You heard it, folks. It's pretty straightforward, easier said than done, I'm sure. But it always comes back to revenue, right? Like it helps to have someone like Naman at the helm who like is obsessed as it should be with revenue, because at the end of the day, like I mean, I seem repetitive for folks who from our community keep tuning into these streams, but at the end of the day, we're a business and you need to keep your lights on, right? And you have people depending on you, and at the end of the day, if you don't have revenue coming in, it means that there's something wrong, right? There's an appreciation for what you're doing. Um, our model revenue is one side of it, right? Because for the token, as you mentioned, part of it is for every dollar that comes in, 50% is burnt, and then the other 50% as well. It's not burnt, but it enters the token economy, I would say, right? Sheena, what role does community play for us, right? Because on one side, if you actually think about it, it's involved on both sides of the equation and the pendulum, because revenue is users, right? And which is a way of community. And then the other side, you have community as well for the R, which is our burnt mint ratio guiding our equilibrium. So what role does community play for us at 360 degrees and notice? You have to wear your 404 hat in this case.
So I see, I think one thing which I've always stood by, and I think I've posted also a lot about it, is that at the end of the day, your real voice is your community, because they are the ones who believed with you, it's say on day zero, day 10th, and they are the ones who's going to stay with you forever. They are essentially the one who have invested in you, not because of someone blabbing about your project, but because they read about it. Today, I think Alex made an amazingly good post where she did target a few parts of our Web3 stakeholders, you can say. I'll rather use some nice words. So even what she said was so true, right? Like the moment, like, people who are so loudly talking and screeching about your project, do even any of them know what the main, even if I have to ask one or two, what is the goal of this project on an impromptu meet, I doubt they'll be able to tell. But your community, the moment you ask them what is NodeOps, they ask you questions, they contribute towards your protocol. Like even if you look at Pipo 4, it's not only about voting on that model, but we are actually getting a lot of insights, a lot of feedback from the community. Now your question about the burn that you're mentioning, see, it's twofold over here, right? The moment we are burning, we are putting back value to our token as well, right? So we are essentially appreciating in a good manner, positively for the holders. It has nothing to do with the charts or anything, but it's just that you're accruing value to a certain underlying asset that's involved. On the other hand, when you're putting back that 50%, the balance back into the protocol, you're actually investing something more for further expansion. That's what I read. So in a way, you're not only just trying to push up the value of an asset, which is just, token is a very small part of this industry. I don't know, a lot of times I remember when I joined this space, people were like, oh, you work for Bitcoin. So you literally have to explain them that Web3 does not boil down to Bitcoin, does not boil down that you're trading in the morning and leaving the laptop with some bucks in your pocket. That's not what Web3 is, and that is not what Web3 was built out also for. Token is a very part of this, is a very small part of this whole universe. But the when and I think we have always said that this is the AI for the community, this is the cloud for the community. What we are doing is for the community. And every time, that's why we have the governance model in place from day one. So for us, community plays an essential role because strongly believe that they are going to be the flag bearers. They are going to be the voice of your project that is not there only when there is a hype cycle, but they are there throughout your journey when you're building, you're shipping, you're creating something, giving you validations, and then how you're further expanding along with them together. It's a simple take. Nothing very
Absolutely.
complicated here.
Couldn't have said it better. And yeah, I think in a nutshell, the TLDR is that community um, is everything for us, right? At the end of the day, so it's literally at the center, at the core of everything we do. And I think Naman, you mentioned it last week in the People for the deep dive live stream that we did, in the sense that every new innovation, meaning either a new feature or a new product that will be coming as part of the NodeOps network suite, will have Node underpinning it, right, as the economic layer governing the NodeOps network. Guys, I'll chat to you guys at length, but I know you're both busy individuals. That said, Ashwadi, like I think one last question I want to ask you is, what advice would you give to builders out there, right? And given where we are AI having a huge influence. Everyone can become a builder. Yeah, where do you think we are as a space? Where do you think we're heading? And yeah, what piece of advice would you give to someone who is building in the
I
space?
think on the builder side, we are in an industry which is evolving like very fast from a technological perspective. So like there are a couple of points like which you as a projector as a builder needs to kind of look out for, and like this is how they can kind of go out and grow. One is like they need to always be updated on how they can like make themselves technologically the best in the space. The second is like how they can capture distribution. Like technology from a perspective, like the more blockchains like come into the world, the more commoditized everything becomes, which means that having a blockchain or having like a particular product would not be a mode. Having a distribution which is using that product would actually become a mode. So that is where like effectively the biggest focus has to be, which is like you need to kind of go out and you need to figure out how and where is your distribution, and you need to capture that distribution, because that is what would make you as a project sustainable, rather than just kind of going out and hearing like too many buzzwords and saying, okay, this is the only thing that can save us from a tech perspective. So I think tech is important. Like if your tech doesn't work, then you cannot have distribution. So but tech is like important, but it is not the most important thing. The most important thing is how you actually create that distribution which effectively can help you run your business.
I mean, I could not agree more, right? I've said this in the past that if, of course, this is for a hypothetical scenario, if Steve Jobs was the only person who had made like, of course, it wasn't just him who built the iPhone, right? But if he had built it himself, say, at his house and nobody was aware of it, we wouldn't be, where we are, right? Like it comes down to adoption, right? And that you might have the most amazing product, but if folks are not aware of it and there isn't that element of discovery, as you mentioned, distribution is pivotal, especially. I don't know what you think, Shane, as well on this front, that we're heading towards a time where we're gonna see more and more builders, right? Because essentially now with AI, you're gonna have folks who approach things differently, right? And like individuals who might have a crazy idea, but through AI, they might bring to market solutions that find PMF quicker, or they might get recognition for whatever reason, timing, the right audience, tackling the right problem statement. But so I think having ownership on distribution is pivotal on terms of tech. So I'm glad you said that. Shane, I don't know if you have anything to add, but yeah, yeah,
Yeah, just one piece of advice. I think there are several examples now, including NodeOps itself. It's not essential that the moment you think of an idea and you're trying to bring it to life, you bring in your token along. It's okay. I mean, there are a lot of projects where you can even survive if you don't have a token. So it should be more like an economic engine and not be something just like a marketing cost for you. It's very brutal to say this, but that's the reality. Yeah, I think for the builders out there, the sky is the limit. Keep building, keep innovating, and also just analyze if you really need to launch a token for that, if there is really a need. Otherwise, even if you're just building in the space and doing a valuable contribution, that's also something very incredible that you're doing. I don't know if Ashwarya and Eric, you both are in agreement to this, but you really essentially don't really need a token on day one or even say on the 20th month,
couldn't agree
unless
more.
until you have not identified the demand. It's not sustainable. I mean, funny as it may sound, but till today, Eric, even before NodeOff started, I was asked to make a cash flow statement, which is actually for 5 years down, and it has a proper month-wise breakup. And I'm actually pulled up sometimes by the three founders at, hey, why is your cash flow lagging behind? Why is the prediction still coming, but the actual numbers are not plugged in? So that's how we have been closely looking at things, so that what we are delivering is in sync with the demand that is there for it, and the innovation or the costing that has to go in this to in order to make a more sustainable economy. Yeah, that's my simple take on
Ashwadi, anything to add? Because I think, yeah, I couldn't have said it better.
No, I think probably I said everything.
it.
That you heard, guys. It's
He's been
been
a great supporter. I mean, I should take this platform actually to extend our gratitude to him for always being supportive. Also, you've been a trial runner for many of our early products. But yes, in the morning you did text me something. What is this now? I will give you the download because that's still under the wraps. So
Okay.
he's our guinea pig, actually.
That's how it works. It's Ashwari, I want to thank you very much. It's been it's first. I think it's interesting to meet someone for the first time through like a public audience, like a public platform such as this one, and hear your refreshing takes. And want to thank you for being an avid supporter from day one, right, of the NodeUp's vision and mission. And I'm sure you'll receive more, what can I say, alpha messages because the team will not stop innovating. So. Thanks to everyone who tuned in. Thanks to Sheena, as always. And yeah, guys, until next time. I don't know if you have any concluding words, but that's it from my end.
Thanks, Eric, for hosting both of us.
Yeah.
Thanks, Ashwari, for pulling out time before you're flying to your next destination. We have been able to